Trading is not just about mastering chart analysis or keeping up with macroeconomic news. It's fundamentally a psychological battle with yourself. One of the most insidious enemies every trader faces is the blame mindset, the tendency to shift fault onto external factors. Have you ever felt that every mistake in your trades was caused by an unfair market, unpredictable economic volatility, or someone else's fault? Or perhaps you blamed your trading platform, the tools you use, or unreliable signals. This is a classic sign of the blame mindset, a mentality that keeps you stuck in place, preventing growth and causing you to miss the opportunity to truly take control of the market. This mindset is especially dangerous in scalping, a strategy that demands lightning-fast decision-making and razor-sharp focus. The blame mindset erodes your decisiveness and emotional control. If you fail to recognize and overcome this mental barrier, you will never achieve sustainable progress in your trading journey. When stepping into the world of Forex and scalping, you will quickly realize that success depends not only on understanding technical indicators or order entry strategies, but also heavily on your trading psychology. Among the biggest obstacles holding traders back is the blame mindset, the tendency to blame external factors for losses rather than taking personal responsibility. Point 1. Loss of personal accountability. The foundation of progress trading is a journey full of risks, probabilities, and rapid decisions. When you consistently blame external factors such as the unpredictable market, excessive spreads, or inaccurate signals, you are effectively refusing to take responsibility for your own actions. This is dangerous because without owning your mistakes, you will never fix the flaws in your strategy, risk management, or analytical skills. For example, a losing scalper might blame slippage or slow order execution by the broker, but in reality, poor entry timing or overly wide stop losses are often the root causes. Embracing personal accountability enables you to focus on skill improvement, gradually enhancing your trading performance. Point 2. Negative psychology undermines focus and decision-making. The blame mindset breeds feelings of frustration, anger, and disappointment. These negative emotions create psychological barriers that erode a trader's mental clarity and ability to make quick, decisive moves, especially in scalping, where every second counts. When caught in the blame cycle, your mind becomes scattered, emotions run wild, and you are prone to overtrading, revenge trading, or impatience in following your plan. This prolongs losing streaks and drives you deeper into stress and negativity. Point 3. Limits learning and development. Successful traders view every failure as a valuable lesson for strategy adjustment. But with a blame mindset, you avoid deep analysis of why a trade lost and instead point fingers at external factors. This creates a psychological safety zone that discourages change and growth. Without recognizing your mistakes, you won't know where your weaknesses lie, whether it's weak technical analysis, poor discipline in risk management, or flawed order execution. Consequently, you remain stuck in a loop of failure, unable to progress toward becoming a professional trader. Point 4. Severe impact on risk management and trading discipline. Risk management is the lifeblood of any Forex and scalping strategy. The blame mindset leads to reckless behaviors such as increasing position size to recover losses, holding losing trades longer than allowed, or even breaking stop-loss rules. Blaming the market or your trading tools reduces your self-control and discipline adherence. This not only leads to financial losses, but also erodes your confidence for future trades, creating a dangerous downward spiral that can eventually wipe out your account. Point 5. Blame mindset breeds impatience and quitting. The financial markets are harsh environments that demand persistence and mental resilience. However, the blame mindset makes you feel constantly wronged and frustrated, quick to blame circumstances rather than focus on solutions. When results don't come quickly, it's easy to lose motivation and give up on trading altogether. In contrast, successful traders understand that losses are an inevitable part of trading, and that patience and continuous learning are the true keys to long-term survival and growth. In summary, the blame mindset is not just a negative psychological state, but a direct barrier preventing you from becoming a successful Forex and scalping trader. Recognizing and courageously confronting this mindset is the first step toward building a winning mentality, one that allows you to control your emotions, improve your skills, and achieve sustainable results in the market. After clearly identifying the detrimental effects of the blame mindset, the next and most crucial step is to learn how to overcome this mentality in order to develop sustainably in Forex and scalping. Below are practical strategies and methods to help you master your psychology, control your emotions, and elevate your trading skills. Point 1. Accept reality and take full responsibility for every decision. The core factor in overcoming the blame mindset is having the courage to take personal responsibility for every trading decision, whether it results in a win or a loss. Don't seek to blame the market, the spread, or the broker. Instead, ask yourself, was my entry point accurate? Is my risk management effective? Am I following my trading discipline? This acts as an inner compass to help you build a detailed trading journal, recording all your actions, emotions, and outcomes. When you take absolute responsibility, you will clearly see your strengths and weaknesses, providing a solid foundation for daily improvement. Point 2. Develop the habit of self-reflection and trade analysis. Every trading session, win or lose, is a valuable lesson. Take time to thoroughly analyze each trade. Why did you enter the trade at that point? What was your capital management plan? Did you adhere to your stop loss and take profit levels? How did you feel when entering and exiting the trade? What factors contributed to the success or failure of the trade? This habit not only sharpens your analytical thinking, but also minimizes the blame mindset because you proactively identify causes rather than blaming external factors. Point 3. Discipline yourself and strictly manage risk in scalping and Forex. Strict adherence to risk management is non-negotiable. You need to clearly define your maximum risk per trade, e.g., 1 to 2% of capital. Set appropriate stop losses and stick to your plan regardless of market volatility. Trading discipline helps you avoid losing control during drawdowns and prevents behaviors like revenge trading or increasing position sizes impulsively. With solid discipline, you are less prone to falling into the blame mindset because everything remains under your control. Point 4. Practice meditation and emotional control techniques. Trading is not only a technical skill, but also an art of psychological mastery. The high-pressure moments in scalping require absolute calmness. Meditation, deep breathing, or mindfulness techniques can help you relieve stress, maintain mental clarity, and regulate emotions. When your emotions are stable, you're less vulnerable to the blame mindset, reduce stress, and avoid emotionally driven decisions like revenge or impulsive trading. Point 5. Set small, specific, and realistic goals. Setting overly ambitious or vague goals can lead to discouragement and blaming when results don't materialize. Instead, establish small, manageable goals such as maintain 100% stop loss discipline for 1 week. Keep a complete and honest trading journal for a month. Focus on improving chart analysis skills for a specific currency pair. Maintain a minimum risk-reward ratio of 1 to 2 on all trades. Achieving these small goals builds momentum, confidence, and gradually reduces the blame mindset because success lies in your hands, not external luck. Point 6. Seek support and learn from the trading community. No one is perfect, and trading is no exception. Sharing and learning from experienced traders, joining support groups, or attending courses expands your knowledge and fosters a positive mindset. Knowing that failure is normal and an essential part of the journey helps reduce blame mentality and replaces it with patience, acceptance, and a learning mindset. Point 7. Remember, the market is impartial. It only reflects your actions. One of the most important truths traders must internalize is that the market shows no favoritism. It only accurately reflects the decisions you make. If you lose money, it's because your strategy or actions don't fit the market conditions, not because the market is unfair or someone is against you. Understanding this helps you gradually escape the blame mindset and build a proactive, controlled mindset ready to adapt to any market fluctuations. Overcoming the blame mindset is not an overnight achievement, but a persistent, daily practice. By taking personal responsibility, conducting thorough trade analysis, adhering to disciplined risk management, controlling your emotions, and setting realistic goals, you will progressively develop the mindset of a winning trader. This foundation will not only lead you to success in Forex and scalping, but also transform trading into a tool to master your life, achieve financial freedom, and pursue comprehensive personal growth. It's time to stop looking for external enemies to blame for every loss. The financial markets, especially Forex and scalping, are not for those who accept a blame mindset. They belong to traders with a resilient mindset who take full responsibility and continuously strive for self-improvement. Point 1. Look yourself in the mirror. You alone are responsible for your trading results. No one can control the market, but you have complete control over your attitude, strategy, and emotions. Instead of blaming the spread, slippage, or unfavorable conditions, ask yourself, how well prepared am I? Am I strictly following my trading discipline? When you fully realize that success or failure starts with yourself, you'll find the motivation to improve every day and take control of the market rather than being controlled by it. Point 2. Commit to building a winning mindset. Persistence and never giving up. Trading is a long, challenging journey. A few losses or short losing streaks are not disasters if you have a winning mindset, the ability to get back up after failure, learn from mistakes, and keep moving forward. Commit to learning something new daily, adhering to strict risk management, maintaining a detailed trading journal, and managing your emotions. This mindset is your most valuable asset to overcome market volatility and pressure. Point 3. Focus on the process, not the outcome. A common mistake traders make is judging themselves solely on short-term profits or losses. In reality, the key is to focus on a disciplined, process-driven trading approach that faithfully reflects your strategy. When you set goals to improve skills, learn market analysis, maintain discipline, and control emotions, consistent financial results will naturally follow. Blame mindset tends to arise when you obsess over short-term results. Avoid this trap. Point 4. Build a supportive trading community and grow together. No one should walk the trading path alone. Seek out a community of positive-minded traders who share experiences, support each other's learning, and overcome challenges together. A positive trading community reduces feelings of isolation, boosts motivation, and especially helps limit blame mindset through objective discussion and emotional support. Point 5. Don't hesitate to seek experts or trading coaches if you find yourself stuck in a blame mindset or struggling to control emotions. Don't hesitate to consult experienced trading experts, coaches, or mentors. They can help you accurately identify weaknesses in your strategy and mindset, teach techniques to manage emotions and risk effectively, support you in building a personalized development and trading plan. Investing in yourself is always the highest return investment on the path to becoming a professional trader. Inspirational closing. Remember, trading isn't a race against the market. It's a journey to master yourself. When you let go of the blame mindset, take full responsibility, and cultivate a winning mindset, you don't just improve your trading performance. You become the best version of yourself. The market will always have volatile days and tough times. But with a proactive attitude and ironclad discipline, you will stand firm and succeed on your financial journey. Start today. Commit to no longer blaming external factors. Instead, act, learn, and grow relentlessly. The story of Mike. From blame mindset to winning trader mindset. Mike is a young trader from Chicago who jumped into the Forex market with high hopes. He believed that with the right technical analysis, some solid strategies, and a bit of luck, success would come easily. At first, Mike spent countless hours studying charts, following expert webinars, and eagerly placing his first scalp trades. But reality hit hard. Losing streaks started piling up. Slippage, unexpected spreads, and volatile market conditions drained his account. Instead of looking inward, Mike began blaming his broker, faulty indicators, or what he called unfair market conditions. The blame mindset crept in slowly but deeply. He felt frustrated, powerless, and his confidence started to crumble. What once felt like an exciting journey quickly turned into a source of anxiety. Mike almost quit trading altogether, convinced it wasn't for him. One evening, Mike stumbled upon a quote from a veteran trader. "The market doesn't owe you anything. It only reflects your decisions." That simple truth hit him like a lightning bolt. He realized that blaming the market or external factors was keeping him stuck in a cycle of failure. From that moment, Mike committed to changing his mindset. He started keeping a detailed trading journal, logging entry points, stop losses, take profits, and his emotional state during each trade. He stopped avoiding responsibility and began facing his mistakes head-on. Poor entries, weak risk management, and impulsive decisions. Mike set small, achievable goals. Learn one new skill every day. Strictly follow his stop-loss rules and practice mindfulness to keep emotions in check. Most importantly, he took 100% responsibility for every trade, refusing to blame anything or anyone else. Month by month, his results improved. Mike no longer panicked during market swings. He accepted losses as part of the process. Every mistake became a valuable lesson for refining his strategy and mindset. He also joined online trading communities where he could exchange ideas, receive support, and stay motivated. Having a network of like-minded traders helped him feel less isolated and reduce the urge to fall back into the blame mindset. After a year of consistent effort, Mike transformed completely. He wasn't just consistently profitable, he had developed the winning trader mindset, accountable, disciplined, emotionally resilient, and always eager to learn. More importantly, he became the master of his emotions and strategies, rather than being a slave to the market. What Mike's story teaches you, Mike's journey shows how critical mindset is in trading. You can have the best strategy and technical skills, but without overcoming the blame mindset, long-term success will remain out of reach. Instead of searching for external enemies to blame, turn the focus inward. Own every decision and learn from every failure. Build habits like journaling trades, sticking to risk management rules, and managing your emotions. That's the foundation of lasting success. Remember, the market doesn't favor anyone. It rewards traders who are patient, proactive, and committed to developing a winning mindset.